Hello, today is Sunday. It is 6:42 in the morning. Wanted to get a quick review out. The weekend report is titled "The Stock Market Pushing Through the Headwinds," and this is your weekend report. Hi, this is Jonathan Gurney, Portfolio Manager at Gurney Financial. This post is for informational use only. The views expressed are those of the author, Jonathan M. Gurney. That is me. This material is not intended to be relied upon as a forecast, research, or investment advice. It is not a recommendation, offer, solicitation to buy or sell any securities, or to adopt any investment strategy. In short, we're keeping clients aware of what's happening in the market, what we're seeing. There are plenty of headwinds we need to talk through. Let's get to the charts. Okay, we're going to work backwards here. We're going to talk about some of our favorite charts of the week and kind of work backwards, okay? So first off, we're getting into that time where people bring their opinions into the stock market based on political views. It's one of the worst things you could possibly do, okay? People just assume that when they get their way in the presidential election, the stock market is going to either tank or soar. Doesn't work that way, I hate to tell you. Okay, so here's the deal. Plenty of headwinds. Yields are skyrocketing. The 2-year yield at one point this week was 4.6. Scary number historically. Moving on from that. The dollar was higher. Midterm election, that's going to scare people. Global tensions. Despite all of that, the market was up strongly higher. We've talked about it several times. We need to be objective and say the news can continue to get worse. The economic data can continue to get worse. Fundamentals can continue to get worse. What is price doing? Price had a good week. Does that mean it holds? No. But we'll see. Right now, we're above all short-term moving averages, and that is a good thing. Okay? So based on where we currently stand, I keep trading in and out at key levels. We are 50% in as of the close. We eked out a gain. It's not exactly what I wanted this week, but it was trappy overnight. A lot of the moves did happen Monday and Tuesday. I mean, right there was almost a 4% gain on gap ups, which puts you behind the 8 ball starting right from the beginning. But we regained later in the week. Again, the big thing to understand in the market that many people don't is the market is either trending or consolidating. After Monday and Tuesday, it consolidated and bounced. I'll show this to you. So back to the midterm election, okay? And my point in showing you this, I don't want to hear your political affiliation rambles about the market. Here's the facts. It doesn't mean it's going to happen this way. Subsequent 12-month S&P 500 price return following a midterm election. The average gain is 16.1%. The market is down for the year 21%. I hate to tell you this, but the odds are probably in good favor for this to continue to rally despite all the horrible news. Now, despite what I just said, I'm going to trade price action. And I have the key levels. If we lose the key level, I'm out. It's that simple. There's no bias. Go into each day and trade price. Okay, so there's the presidential chart. Midterm presidential chart. Now, let's go into performance. The big boys. I'm going to start the chart. I'm going to start the timer, the 5-minute timer. Okay. The 10 big boys, and what this is the 10 main stocks in the S&P 500 that make about 30%, sometimes more percentage of the index itself. You can see these names did incredibly well. That's a good thing. And despite yields being much higher this week, these names still did better. So you can have a bias all you want and say, oh, yields were higher, the market's going to tank. That did not happen. Price dictates everything, okay? So now let's move into sectors. I find this very interesting that many of the safe havens actually were weaker this week. Utilities, consumer staples, a general winner, which was still positive for the week, was healthcare. And of course, energy continues to be very, very strong. It's actually the leader. But we kind of had a little bit of a rotation, which is interesting to see under the hood. Now let's switch to the price action itself, which is the most important thing. Okay. Number one, look at the top right, and it said, I want to see us get above 37.72. If we get above 38.05 and hold there, this is going to lead to very, very good things. Okay. We're not there yet. Hold the S&P 500 37.27, which is a very, very key level. We've continued to go up all week, go up to that level and just get smacked. Okay. So I actually had a positive week, not by being long, but by being short. I was long and short at different times this week. There's opportunity in this market, but I'm keeping everything small. Again, we're 50% invested based on the evidence. Based on the evidence, short term, what do I see? We're above the 10-day, this purple line. We're above the 5-day, which is short-term trend, largely above the 5-day moving average. And we're above the 20-day moving average, which has been resistance many, many times. So from a short-term perspective, what is price telling you? You got to have some in, okay? You can say, you could disbelieve, you cannot believe everything you're seeing in the news. It doesn't matter. Price is going up. I have to trade that accordingly, okay? Next chart, next time frame. This is a little more complicated, but it's the same chart, just with markings, okay? These red lines right here is the channel. Many times, one of my favorite setups is breaking the channel and the retest, which we did retest overnight. We still have this gap down here, which scares the crap out of me, but it could still go higher, okay? So we broke the channel. In short, this was the level weeks ago that I definitely called and said I want to buy the recapture of 38.41. And it did. I wanted to see this test and not buy until 35.41. And that was a 5% day for us. It was a really good week. This week was, I'm being cautious because we were in a chop week. The market is either in a consolidation phase or a trending phase. Monday and Tuesday were trending. They moved about 4% overnight. It was insane. So if you weren't in the market those days, which I wasn't, that was tough. But usually after moves like that, you consolidate, which is exactly what we did. So Monday, Tuesday, gap ups. Wednesday, Thursday, struggle, consolidation. Friday, dip down, tested a key level. I wanted to buy 36.38. I was short into that day, but from 9 to 9:02 in the morning, before the market opened, couldn't do anything. 9 to 9:02, the market moved 1% in 2 minutes. That happened to me twice this week, where it should have been about a 4% week, but in 2 minutes, wiped out gains. It's like, what do you do? But overall, price action is good, and you have to respect that. Next time frame, one of my favorite time frames is this one. Okay, you can see we're kind of getting this cut pattern here, which is not a bad thing. We are above the 200, this red line, 37.27, which is the key level. Would it shock me to test this level quickly? No. It would not surprise me to test 36.75 either, this blue line. Okay, so I want to be 50% in because the price action is suggesting this. However, are we a little bit cooked and overbought? Yes, that doesn't mean we're not going to go higher. In fact, after the market closed, the market went up another 0.33%. So we'll see what happens. Okay. And finally, another weekly perspective. We are above the 5-day moving average, which is, again, short-term trend, 37.10. So on many time frames, good price action, okay? Does that mean we're just going to rally higher? No. In fact, it'd probably be more healthy or healthier to get a down move to just chill out RSI. But the market doesn't always work that way. A lot of times it forces people to chase. One final thing that I didn't bring up in this particular video, okay, and why I'm 50% in. The good news is price action is good this week. This a little bit concerning thing is the put call ratio is not really as high. What has been really fueling a lot of these moves is the put call ratio being high. The put call ratio is 0.58, which is pretty low given the current environment. It's good to see some buyers come in. So again, what I want to see is buyers come in and a put call ratio high. We're still kind of in that mode, which is not a bad thing. The thing that concerns me the most is we had new lows despite the market being up like 2.4%. So you can see here, new lows over new highs. That's very weird. So again, you can kind of see why, okay, I can see why you're not pushing hard here to the upside. I'm 50% in. I think that is where I should be risk reward wise. If we gap up hard, I will manage the position and probably take some profits. But overall, it's not a bad position. One more chart to keep us objective, okay? I want to give credit to Ian McMillan and his team, Kevin Ferrari. This is how the business cycle generally works. I think we're actually past stage 5, okay? Stocks and bonds go down. So when people are like, you can hedge with bonds, the 60-40 portfolio, 60% equities, 40% bonds, got smacked this year. Okay, so as I've been saying, when things go down, they all generally go down. So cash is a position. Now we're in the phase where commodities are starting to go down. Like crude is going down, but energy names, which is one of the strongest sectors right now, is actually going higher. So kind of interesting that all bond stocks and commodities were starting to go down. I think we're in stage 6. Doesn't mean we're bottom, but I think this will be a process that we will work through. Okay, so that's an encouraging thing. One more chart. This is another perspective basically showing the same thing, is the market generally gets all of them. And that's basically what the last chart just showed, is commodity turns down. This is what you want to see, okay? So we're starting to see commodities die. The market gets everything. Stock, bonds, commodities. We're finally starting to see the commodities get hit. We're seeing that with natural gas. We're seeing that with many commodities. So credit where credit is due. These guys do a lot of good work, and I appreciate their work. Thanks, guys. That's all we have for this week. Again, the recap is this. Short-term moving averages are looking good. We have to be objective about that. Is everything getting worse? Yes, but that does not necessarily mean the market cannot go higher. Living proof 2021, one of your best years. Why was that? People kept buying and the put call ratio was still pretty high. So it's a different year. It's not going to be that type of year. But at the same time, right now, with where we stand, we have to be objective to say this could really turn. And seasonality is usually generally pretty good into the end of October and early November. So have a good weekend. We'll get through this. I'm going to continue to trade small and trade the plan. Despite it being a very difficult last 2 months, we're positive for the last 2 months. So this week was a little discouraging. Not that I wasn't trading well. I was actually trading very well. But a lot of the moves that I wanted to, hit a target at, for example, Friday, I wanted a target at 36.38. It went to 36.22 at 9 a.m. in the morning. Couldn't trade it. It moved 1% higher in 2 minutes from 9 to 9:02. So I was short. That's what I wanted to. I'm making money both ways. So I'm being objective at key levels. These are the key levels. As you can see, top right. I think we're going to be okay because I'm being very non-biased. I'm trading both directions. we do not want to lose 36.75. I'll leave it at that. 36.75 needs to hold. Even 37.27 could cause some issues because that has been resistance. We keep going above a little bit and then getting killed. But overall, right now, above all short-term moving averages, have to respect it. So remain optimistic here. We'll get through this. Thanks, guys. Have a good weekend.